Hello, everyone. Good evening.
Hi, good evening.
Please confirm you can hear me, please.
Good evening, ma. Yes, we can.
You are audible.
All right, thank you. Can someone please confirm that they can hear me clearly and they can see what is being projected on the screen? Okay, thank you so much. Good evening, everyone. You're welcome to tonight's session, which is the 2025 Nigerian tax reform session, which is being led by the CFO of Optimus Bank, Adetutu Oludare. We're having a very engaging session this evening, although people are still joining. We said 7 p.m., so we're going to start right away. Before I give the floor to our speaker, please give me a few moments to introduce her properly. It is my distinct pleasure to introduce the leader who will guide us through today's session. Adetutu Oludare is a highly accomplished finance professional with over 12 years of extensive experience in financial management, treasury, and risk. She has held pivotal roles, including Head of Finance, Risk, and Controls for Standard Chartered Bank across West Africa, as well as key leadership positions at Stanbic IBTC and Guarantee Trust Bank. She also served as Manager of Treasury and Capital Management at Stanbic IBTC Bank. Academically, Adetutu is a Fellow of the ACCA and holds an MSc in Finance with distinction. She is notably the first recipient in Nigeria of the prestigious Advanced Financial Modeler Certificate, reflecting her commitment to excellence and cutting-edge financial expertise. In addition, she serves as an associate director at Ivy League Associates, where she lectures on financial management and mentors students in preparing for the Oxford Brookes Project. Please join me in giving a warm welcome to the Chief Financial Officer of Optimus Bank, Adetutu Oludare. Ma, you have the floor, please.
All right. Thank you very much, Edidion. And thanks, everyone. Please, if you can hear me, can you just let me know?
We can
Yes, I
hear you
can.
loud and clear, ma'am.
All right.
Yes, we
Thank you.
can.
Thank you so much. And a warm welcome to everyone on the call. Thank you so much to our head of corporate communication for that warm welcome. Thanks for reading that profile and citation. So we'll move into the reason why we're here today. And I'm sure that a lot of us have thought about different things on the new tax reform. A lot of things have come to our mind as to what to expect today. Someone jokingly said that when we get into the new financial year, I mean the new year 2026, we're not only going to be saying Happy New Year, we're also going to be saying Happy New Tax Year, because we're going to be having all the taxes reformed, coming up in 2026, and it's going to be applied to all of us. I believe for most of the people on call today, you either run an SME business or you run a commercial business, and you're interested in knowing how the 2025 Nigerian tax reform is going to impact on your business. And so you're welcome once again. Thank you so much. You can please give yourself a big hand. Thank you for coming. And so
Hello, you're muted.
Good evening,
Sorry,
Caleb.
Hello, people.
Madam
You are
Adetutu.
muted.
I think you've been
I
muted
think you
for
are
a while now.
muted.
My apologies. I think somebody may have muted me mistakenly. Please, can you hear me? Am I being heard now?
Yes,
We
Yes,
can
we
clearly.
can
hear you.
hear you.
We can hear you.
Okay,
You have to go back
my
to your
apologies.
slides.
Yeah,
Okay,
we appreciate if you can go back, please.
all right. My apologies. So I was saying that someone had jokingly said earlier in the year that when we go into the 2020, please, if you can hear me again, just let me know. I'm on the presentation, so I really can't tell what is happening in the chat room. So I said, when we get into 2026, we're going to be wishing ourselves Happy New Year as well as Happy New Tax Year, because we're going into a very pivotal year where we're going to be discussing and we're going to be guided by the new tax laws. And then I also spoke through the different outline that I'll be guided with today. So in June 2025, precisely on the 26th day of June, President Bola Ahmed Tinubu signed 4 significant tax reforms into law. And the reason why this tax reforms were signed into law was simply to just take away the lacuna that we had in the tax rules in Nigeria. Please, can you confirm that I'm still being heard?
Yes,
Loud
yes,
and clear.
we can hear you.
Thank you. All right, thank you. So the 4 tax rules, tax reforms were signed into law, were enacted, and it's just to ensure that all the existing laws, so as of today, from the updates that the fiscal committee, the Nigerian committee that is was given this mandate, they had said that we had over 60 different types of taxes in Nigeria, from the ones that run at the federal level to the one that goes to the state level and to the levies that are collected by the local government levels. It was a total of over 60 rules, 60 laws, 60 tax implications. So what they've done is to collapse all these broad laws, broad rules, broad taxes into 4 major things that you can really, really relate with, that it's easier for every Nigerian to relate with. And they had said that the mandate that was given to them was not to increase tax revenue for government. The mandate that was given to them was to ensure that an individual person can see why it is important to pay taxes, understand their role in the tax refund in Nigeria, and then play their part as well. Because it's someone that has sufficient income that you can tax. They also said that efficiency was another thing that they were asked to look at. How can we ensure that tax rules in Nigeria are more efficient? And then the last thing they were asked to look at is how can we ensure that we can administer these taxes appropriately? That was the mandate, and that was what they worked on. So as we step into 2026, we're going to have an act called the Nigerian Tax Act, which will be NTA. NTA is really focused on simplifying and modernizing the country's tax framework. They are consolidating the existing tax rules into one single coherent legislation, and they want to ensure that there is clarity, there is more efficiency in the administration of taxes, and that taxpayers can be compliant. So that's what the Nigerian Tax Act is set to do. Then we will then have the Nigerian tax. I hope my slides is moving as well. You can just visual me confirm if you can see it.
No, it hasn't changed. I think it's just about to change.
Okay, just maybe there's a little lag. Just please let's allow the network. So we also have the Nigerian Tax Administration Act, which is NTAA. And what NTAA seeks to do is to modernize tax collection process and enhance compliance across revenue generation, also to promote accountability. So we would have stricter, as we go into 2026, there'll be stricter compliance. So where you have, where before people could have, just done things and, gotten away with them without appropriate sanctions or appropriate things meted out to them. There are stricter compliance rule just to ensure that the overall tax administration in Nigeria is better. So moving on, please just permit the little lag that we might be having with the slides. I'm still on the overview, and now we're discussing the third tax requirement, and it is the Nigerian Revenue Service Act. As we also move into 2026, all of us will have heard Federal Inland Revenue Service prior to now. So Federal Inland Revenue Service will be changing their name, or they will be metamorphosizing into Nigeria Revenue Service. So we'll no longer have Federal Revenue Service again. We will now have one establishment called the Nigerian Revenue Service. And what they will be doing is they will be providing consultation and then coordination between the Minister of Finance, the Executive Chairman of the new NIRS. Remember that I said that the FIRS is becoming NRS. So what they will be doing is to mediate between the minister, the chairman of the NRS, and then all public policies that will be existing. Then we would have the Joint Revenue Tax Board. There's an act that will be moderating the activity in that space. And what this is doing is to create an institutional framework that would harmonize revenue administration across Nigeria. So taxpayer, they will also be serving as a body that will be protecting taxpayers. So in case you have complaints, you have things that you want the law to look at that they may not have looked at, there's a tax appeal tribunal, and then there's the Office of the Tax Omnibox. So let's now look at the different objectives. So why? You have said that it is not majorly for revenue generation, but again, when taxes are properly administered, they will increase the revenue generating capacity of the nation. So with the new tax law, we will get to the digitization that is coming with it and e-invoicing, right? So with these platforms that are available, the government is able to effectively match and ensure that they are able to get taxes from both individual companies, whether you're small, whether you're large. That fairness comes into it, where there's an introduction of an effective tax rate and a minimum tax that we would also talk about when we go into the impacts for different businesses. But these are the different things that will help the government to generate a lot more money. Prior to now, the administration for tax was broken down into the federal would administer theirs, the state does their own administration, and then the local government. But with this combined nature of taxation, everybody comes together and then they then get different shares. Again, that's not the focus for today, but government revenue is definitely going to increase with the new and the proposed reform. Another thing that these new tax laws or the new tax reforms will do for us is that we would promote, a lot of people can then take on entrepreneurship. When we get to it, you see how much rebates or how much freebies that is available to small businesses in Nigeria. Today, the complaint of an average Nigeria is they call one metrics the ease of doing business. Everybody complains that the ease of doing business in Nigeria is pretty much on the high side. People that are paying taxes, they pay to a very extreme extent, while people that are not paying taxes are totally just evading it. But with these new tax laws, with the things that will be done for SME businesses, a lot of people would be able to launch out and venture into being entrepreneurs because they are able to retain their profits and they are able to reinvest it as appropriate. It will also promote equity, because what is going to happen is that for the small businesses, they get rebate, the mid-based business, they pay a fair share of taxes, while the larger corporates pay a lot of taxes. So that way, the gap between the rich and the poor is seemingly going to be collapsed, and then Nigeria will be a better place. So it will drive economic growth. It would improve tax management. You know, we now have one centralized source of truth. Everyone is now coming into a big pot. The federal, the states, the local will then get their portion. So everybody's focus is single. No one, they are no longer working at disparity. Everyone is working to ensuring that we eliminate multiple taxes. The taxes that seem to be overlapping are already also being eliminated. There are everything is harmonized, and then we get improved tax administration in Nigeria. One thing that we must not take away from this new reform is the fact that everybody then needs to comply. If you're not going to, it's been done in such a way that the objective of the buyer and that of the seller is directly opposite. The buyer has a aim to ensure he's able to get a refund. The seller also has another aim. So everybody is working at cross purpose. Therefore, you are a check, the buyer is a check against the seller, and the seller is a check against the buyer. So that also helps, and then everyone becomes compliant. We are the introduction of the e-invoicing platform. I'm also going to go into details of what that entails at the later part of the slide. You see how the unification will help to ensure that there's simplification of the tax processes in Nigeria. Then we would also, the new tax reform ensures that regional biases are already, taken care of because of the centralized administration and the harmonization of taxes that we have across the jurisdiction. So what are these reforms? We've talked about their benefits. So we take them one by one. And I've spoken a lot about what will happen to small businesses, and I would like to just take time to explain this. So there's increased exemption for small and medium businesses on the call. What is a small business and what is a medium business? So if you look at your business and the turnover will be maybe your gross sales, right? In your business is less than 100 million, and your total fixed assets, everything that you use to generate profit for your business that you have categorized as fixed assets on your book, if it is lower than 250 million, you will now be totally and completely exempted from company income tax. Subsequently, I'm going to call company income tax CIT. So you're totally exempted from CIT, and then capital gains. And there is also a new development levy. That's the next point I'm going to be discussing, what that new development levy is. A small business is totally exempted from the payment of this new development levy. So you can imagine that if you're a small business in Nigeria, you can now transact with ease. Everything you do, the only thing that you will now be exposed to in terms of taxation will be your own personal income tax. And that's why when you have a business as an entrepreneur, you should seek to pay yourself a form of salary. So on that salary, you then have to pay your personal income tax. So that's the only sort of obligation that you have if you operate a small business whose income range is within or is less than 100 million. The turnover in your business is less than 100 million, and then your fixed asset. But if your turnover is less than 100 million and then your fixed asset is greater than 250 million, then you will no longer qualify as a small business. Then you will pay taxes in line with what the big businesses pay. But if you're within this threshold, you no longer pay CIT, you don't pay capital gain tax, neither would you be paying the new development levy. Those are the things that this reform has spoken to. I'll move swiftly into what is this new development levy. Prior to now, we used to have, when you pay your taxes, there are a lot of things that you have to consider as a company. You look at your tertiary education tax, you look at the police trust fund tax, you look at the National Agency for Science and Engineering Infrastructure tax, then you pay the National Information Technology Development Agency taxes. So these were all the different additions that you pay in addition to CIT that was at 30%. But now we're no longer going to be considering these taxes, the tertiary, the police trust funds and everything. The new tax reform is introducing a consolidated levy and this levy will be at 4%. And the good news is, if you run a small business, and if your business is as we have described in the first point above, you would not be eligible to pay this 4%. Again, someone is not going to be wondering, from commercial businesses, so what's my lot? Yes, you will pay this 4%, but there are so many other benefits that you can also enjoy. Just stay tuned, and you will get to the benefit you have to enjoy as well. So the new tax law that will be effective from January 2026 also introduces what we call the minimum effective tax rate. So if you have companies whose annual turnover is 50 billion or more, or those that belong to multinational groups whose turnover is in excess of 750 euro, you would now be expected to pay a minimum tax of 15%. So after all your income tax is computed, if your tax is not up to 15%, then you have to pay 15%. So that is a new addition that has come into existence, or that will be coming into existence effective January. You'll be required to pay 15% as minimum tax if your company falls in this threshold. Then, I also said earlier that if you are a personal, if you are a small business, what you are then eligible to pay is personal income tax. But there's also a good news so I'll leave us to determine whether this tax reform is excellent or otherwise. Maybe I'll just ask the question when we are done, that do you think that the tax reform is excellent, or do you think it is not excellent? But I think that it has quite a number of things that a lot of people, average Nigerians, can lay claim on and ensure that they are able to effectively manage the total tax that they pay. So company income tax, there's a revision to this. If you're an individual whose total income for a year, if your earning is lower than 800,000, you would, in a year, then you will be totally exempted from personal income tax. So you can imagine the people that already fall into this bracket, how happy and excited they will be. If you know that the lower the tax that a person pays, the more disposable income the person has, and the more he's able to spend, the more the quality of the life of the person also increases. So the people in this category will be a lot of people who are typically low income earners. Now they will earn their pay, get their salaries, and there will be no taxes on their funds at all. However, for people that then earn more, they then pay more. Again, the concentration and the attention for this discourse this evening is not on personal income tax, but we won't do justice if we don't talk about it. So taxes will now be progressive. The higher you earn, the higher you pay, and then it's up to a bracket of 25%. So when the tax is effective, a lot of people that earn salary, if you earn over 1.2 million in a month, then you expect increase in your taxes. If you earn lower, then you know that of a truth, you can go home without thinking. Some people's taxes would drop, while some people's taxes would increase depending on where you are in the tax bracket. Another thing that is very interesting that the new Nigerian tax reform has introduced is there will now be more zero-rated value added services. As we go on in the slide, I would explain the difference between when an item is zero-rated and when an item is exempted. But for the key reform, note here at this point that we have more zero-rated items. And when we say a item is zero-rated, it means that there is a VAT implication on that item, only that the VAT is at zero. So we have a lot of products that have been brought into the zero-rated bracket, and there's a reason. But just stay tuned. We would still explain why. So tax, the VAT, value-added tax remains at 7.5%. There are just new additions into the zero-rated portfolio, and also new additions into the exempt portfolio, and also there's a reason. Another thing that is very important for businesses to note now is that you can recover your value-added tax, right? When you have a value-added tax on a good or a service that you had purchased or that you had procured at a different time, when at a later time you can claim this value-added tax as a recovery, for you later. And they have also made a promise that if you have a receipt with you, an invoice with you that you need to claim, that they had made a promise that in 30 days, 30 calendar days, you would get back your refund. And I believe that that is also something that is applaudable that the new refund is introducing. I wanted to quickly also explain what a VAT impute may be. So the VAT impute is value-added tax that is, charged or on a good or service that you had procured. Another thing that is very important for you to note in the tax refund is the fact that we will no longer have FIRS. We will now have NRS, right? And that the tax frameworks that were overlapping before will no longer overlap. We would then have a unified framework that is a guiding factor for everything that will be done, and that there is an introduction of a platform that we call e-invoicing. On this e-invoicing platform, we're going to be monitoring all invoices that will be issued. The implementation of e-invoice is actually also tiered, but we'll get there. So we already spoke to capital gain tax. Capital gain tax is one of the taxes that they are increasing the rate. Is going from 10 to 30% for companies. However, it's also not a cause for alarm. Yes, it's increasing, but then there are some exemptions that you can get. So say, for example, you buy and sell shares on the Nigerian Stock Exchange, and what you're buying is lower than 150 million, right? Previously, it used to be 100 million. And the gain from your activity is less than 10 million. And that activity is done within a period of 12 months. You will not even pay anything called CGT. So you can agree with me that if you trade in excess of 150 million and your gain is over 10 million on that trade, then indeed you deserve to be taxed, right? So for individuals, your CGT taxation will be in line with your PIT, your personal income tax, while for companies, it will also be in line with what you're paying for company income tax. So CGT, by quick definition, is that profit that you earn when you dispose capital assets, your properties, your investments. That's what's called CGT. So still on the refunds. So for businesses, for SME and commercial businesses, and I think this will be focused for people, we had already said that the SME business, you're going to get a huge exemption, right? You wouldn't even be paying taxes at all. All you'll be eligible to pay will be the personal income tax that you pay on the salary that you earn from that business. But there's still some incentives that bigger companies can also get advantage of. So there was the introduction of what we call agro tax relief. Agro tax relief gives the agricultural businesses a 5-year income tax exemption. So if you are planning to, start an agric business or anything that is related to agricultural businesses, then you have a 5-year income tax exemption, right? Where you do not pay taxes if this is the kind of business that you want to do. Again, this is to ensure that, there is economic growth. Remember at the beginning, we said one of the reasons why we're introducing this refund is because we want the economy to grow. There's an introduction of what we call allowable deduction for research and development, right? It has been reduced to 5% of turnover. Then there's an introduction of new development incentives that is 5% of your annual tax credit. Again, you can carry it forward for another additional 5 years. So let's talk about penalties, right? We can't talk about the very good things that this new tax refund is introducing without talking about the penalties that you stand to gain or stand to, I don't want to say stand to lose, but that, becomes your lot when you do not file the appropriate taxes. One thing that this tax administration is pushing for is self-reporting. So everything, nobody knows you more than yourself, right? So you're going to be doing self-filing, you're going to be doing self-reporting. However, when you are self-appraised yourself, they will then go to check whether what you have appraised yourself at is indeed correct. Where it is discovered that what you have appraised yourself as is not correct, then you start to get sanctions. So the first thing that can be a sanction to you will be where it is good that you're not supposed to pay taxes, but they have said that you should go online and file that this is my report for this period. It is nil. Where you don't file your taxes appropriately, you then get sanctions. So they're filing late filing penalties. No, from 100,000 the first. Okay, then you pay additional 50,000 for each additional month that you default. Then there's a 50 million penalty for awarding contracts. So the new tax law introduced something that is called tax ID. So your tax ID is what we can use to identify you as a taxpayer. For an individual, your tax ID will get either your TIN or your national identity number, which we call the NIN. And for companies, your new tax ID, your number. Please, admin, could you just help us with those silent background noise? Yeah. Okay. So where a contract is, so you can imagine that you'll be doing yourself a disservice as a business if you do not have a tax identification number, either by your TIN. So your TIN is an identification for an individual, for business, and your NIN is also an identification. If you don't have any of those two, they would not award contracts to you any longer. If the company still insists and awards a contract to you, they get a sanction of 5 million naira. And you can imagine that no company will want to bear 5 million naira on your behalf. So it's just good that we do the right thing. You know, I've heard a lot of things. People have said, oh, they said that they will block our bank accounts, we'll not be able to do anything at all. We must understand what the law is saying and apply it accordingly. Your individual account is not going to be blocked, and banks are not just going to be reporting you unnecessarily. It is if you are using your individual account for business, right? When we start to see proceeds of investment or proceeds from contractual transactions into your account, then we deem you to be an individual that does businesses on their individual account, and therefore that account is deemed to be almost like a business account, and then they'll be filing returns on your account. So we should note the penalty clauses. Early this year, there were some changes in the tax laws already, and withholding tax was part of those tax that was already, was already effective January this year. What is withholding tax? Withholding tax is an advance payment of income tax, and it is deductible at source. It's just like an advance payment of taxation that you can use to reduce your company income tax at a later time, and you can also get claims on it. So I thought it was important for you to know the commencement date. Like I said already, it started January 1st, 2025. There was provision for early application. When do we pay? The new tax law says that anybody that has retail tax from you was supposed to pay it on the 21st of the following month, and payment is supposed to be to FIRS. Remember, I said that FIRS is now going to become NRS. And then if it's for state, we're supposed to pay on or before 30th. But there is a slight update, again, very good for people that have small businesses, people whose volume of transactions are not a lot. So if you have a small company, you are exempt if the value of the transaction or the service that you have provided is less than 2 million naira, and you have a valid tax ID. So if you are an SME business, you have done a transaction for a company and the money they are supposed to pay to you is less than 2 million naira. From today, if anybody withhold tax from you on that value, you should get back to them and tell them that, because this one is already effective, was already effective January this year. Tell them, I am a small company. The service that I've rendered to you is lower than 2 million naira. Therefore, I am exempt from taxation. So we should know what the seminar is also seeking to do, is to give you knowledge enough for you to then apply in your day-to-day dealings as you proceed today. So I already spoke to what a valid tax ID entails. Tax identification numbers for corporate companies is a tax ID. Your national identification number is a tax ID, and your business registration is also a tax ID. So when we talk about withholding tax, it is divided into whether you are corporate, whether you are non-corporate, whether you reside in Nigeria or you don't reside in Nigeria. You know, because where you reside plays a big part in determining where you pay your taxes. So dividend or interest. So if you were to be paid a dividend on an investment that you have made with a company, say you buy the shares of Optimus Bank and were to pay you dividend on it, or there was an interest payment that you were to pay on you, whether you are a corporate person, whether you're non-corporate, whether you reside in Nigeria, whether you don't reside in Nigeria, the withholding tax applicable for your type of investment is 10%. If it is royalty, then if you are a non-corporate, that is different from if you are a corporate. So if someone is paying royalty to you and they will withhold 5% from you if you are a non-corporate. So when you see non-corporate means individual. Yeah. And then if you're a corporate, whether you reside or you do not reside in Nigeria, you pay 10%. This, I believe, is what is really common for a lot of businesses, even for us as individual. Sometimes we have rental properties, we do leases, and then we do hires. Flats across, residing in Nigeria, not residing in Nigeria, corporate or non-corporate, the flat withholding tax rate is 10%. This is where we have a bit of, we always have a lot of conversations with people that have done services for large corporates or for banks where they want to withhold tax. So where you are a professional, where the work you've done is a professional service, say there's someone on this call who runs an accounting firm and provides professional support, you fall in this category. Where you have earned the commission, where you are being paid management fee, where you are being paid consultancy fee, then you are in this category. The appropriate withholding tax, if you are a corporate that is resident in Nigeria, is 5%. If you are a corporate that is non-resident in Nigeria, but you are taxable in Nigeria, it becomes 10%. Where you are a non-corporate, meaning that you are an individual and you are resident in Nigeria, you should tell people that you should only withhold 5% from me. Remember that for small businesses, the only thing that is exempt for you is if that transaction is lower than 2 million. It means that if you have a transaction that is more than 2 million naira, then you are subject to withholding tax, and then it becomes 5% if you have either done a work where you are charging commission, where you have provided consultancy services, where it is a technical management service that you have done, when it is a professional service you've done, then as an individual, you'll be charged at 5%. For those that are into construction, building, and road bridges and all that, if you're a corporate, it's at 2%. If you're a non-resident, it's at 5%. If you're an individual, is also an individual carrying out this business, then is also 2%, and then 5% accordingly. Very interesting part now. If you have done winnings from lottery, from gaming, from, you know, some people will just go on TV shows or reality shows, and your family gets to win, and someone has said that you need to pay tax. You want, but I just want something, right? If you are an individual, if you're a corporate, and you're part of a reality show and you get to win, you don't pay taxes. But if you are a non-corporate and then you are resident in Nigeria, you get to win, you pay taxes as high as 5%. And if you're non-resident, you pay 15%. These are very important for us to note. And this last category is very important. If you're supplying or you are rendering a service that is not listed in all the things that we had discussed above, then as an individual, you say that my withholding tax rate is 2%, and as a corporate, you say it's 2%. But if you are non-resident in Nigeria, we say that the applicable withholding tax for you is 5%. So it's very important for you to know where you fit, what service you have provided, and then what should be withheld from you. as an advance payment. And then also remember that your withholding tax, you can use it to offset your company income tax at a later date. So let's now look at the things that are exempted. We've spoken about the things that we should subject to withholding tax. What are things that are exempted? Goods that you manufactured or that you produced, that has been produced by you yourself. You're the one making the supply, and it is you that has done it. So say, for example, you have a bakery. You have produced the bread, and you're the one selling the bread. Then if you have supplied that to someone, then there should be no withholding tax on such services. So if you are a producer that is also selling your own service, please be sure to tell people that no one should withhold taxes from you. Across the counter transaction. So if I go into a supermarket and I'm trying to buy something or buying off the shelf transaction, I can't tell them that before I pay you, I will withhold taxes from it. No, if you can claim that it was bought on the spot, it was bought on the shelf, then there will be no withholding taxes on that. Interest and fees that are paid to Nigerian banks. So if you have borrowed money, for example, from a bank, and you are to pay them interest, you can't tell the bank that I want to withhold taxes first before I pay you your interest, right? You are not meant to withhold tax on interest that a bank can do a direct debit for you on, and that's the reason why the interest that you pay, you don't have to pay taxes on them. Commission that has been retained by a broker for monies collected on behalf of their principal, there are no withholding taxes on it. For insurance, if you are insuring your vehicle, you can't say that when you want to pay the insurance company, you want to withhold tax from it. Again, they are just going to tell you that your cover is not sufficient, right? So the withholding insurance premium is exempt. Out-of-pocket expenses, is exempt as well. Winnings, we already spoke about it from the reality game show. And if it is focused on academic and technological innovation, it is totally exempt. And supply of refined products, those ones are totally exempted from withholding tax. Let's now go to VAT. And there will be time to ask questions. I'm trying to see how we can get this faster. So what is value-added tax? And this is part of the new additions that we have, and we need to pay a bit of attention at this stage. So we know that value-added tax is a consumption tax. It is charged because value has been added to a stage of production. So at whatever stage of production you have added value to that product. Therefore, you're trying to charge VAT on it. So what the new tax law has done is to expand the meaning of what a service is. When it's a good, it's clearer. When it's a service, sometimes we say there's a lacuna. So what the tax law has done is to make it clear what exactly is a service entails, who should withhold the taxes, and how should it be withheld. So if you have rendered a service, and that service should be in the currency. So if it is dollar, it will be in dollar. If it's in naira, it will be in naira. But don't let me even jump ahead. Let's go. What does the new act say about general services? So first, the services provided to and consumed by a person in Nigeria, regardless of where they are rendered, is the general service. It also says that it applies to whether the service is within or outside Nigeria is inconsequential. All that matters is that the service was rendered. Then it covers cases where legal and contractual obligation, rest with either local or foreign people. The VAT is based on a consumption and not on the provider's location. Who is consuming is the most important thing. So the new act also talks about immovable services. We can have general services, which are the ones that we spoke about, but there are immovable services. And what are those services? When you provide a service that covers lease and rental of commercial property, it is a service you're still providing, only that you cannot move it from one place to another. Where you have done construction, where you have done renovation, where you have done repairs, it is called immovable service, and it is subject to value-added tax. Where you do property management, you do valuation, agency services, engineer work, valuers, architects, all these people are eligible to charge VAT on their transaction. So, but there are items that are totally exempt, right? You know, I said that I was going to do the difference between items that are exempted and items that are zero rated. So I'll list the items that are exempted, but I want us to understand what exemption means. When an item is deemed exempted from value-added tax, it means that those items are not taxable. However, you cannot claim impute VAT credits on them. So all the services that I want to list now, yes, nobody's going to charge you VAT for doing or for rendering those services. However, you also cannot claim impute VAT on those things. Remember that we said that one of the addition that this new tax law has done is that it has introduced, that small window for you to be able to claim an exemption. But if you are rendering a service for an item that is deemed exempted, then you cannot claim VAT on it. So let's look at these products. So crude oil, gas processing products, land building, including the interest in the land and the building, they're exempt. Baby products are exempt. Goods that we use for humanitarian donations, they're exempt. Oil and gas exports exempt. Assertive devices exempt. Government licenses is exempt. Locally produced sanitary towels, tampons exempted. Shared passenger road transport service exempted. Plays and performance that are conducted for educational purposes as part of learnings exempted. Money and securities, including interest on some money and securities, exempted. Military hardware, software, ammunitions, all these items that were listed here, they are tagged exempted. So if you as an MSME or a commercial business or you provide any of this service, it's okay, don't charge your VAT, but then you will not be able to recover an impute VAT. And the impute VAT will be anything that you spent to ensure that this is ready, you cannot claim the exemption. Let's move on fast to zero rated items. So what are zero rated items? These items, those are the ones that the rule says, even though you're not charging, but technically the VAT on these services are at 0%. Therefore, you can claim any impute VAT that you have expended to get this services done, you can claim them. So what are these items? Let's go through them quickly. All medical, pharmaceutical products, including medicinal herbal products, they are eligible. Your educational books and materials. So it means that if you're a school, if you have a school and you have bought educational books and materials, yes, you will not charge VAT on it, but you can claim the VAT that was charged to you to produce that book. So it's something like that. So educational books and materials, locally produced agricultural chemical, live cattle, goat, sheep, poultry, agricultural seedlings, locally produced animal feeds, vegetarian. If you are a vet medicine doctor, you will be able to claim your VAT. Tuition for nursing, primary, secondary school, you will be able to claim your exported services, exported services and property, medical equipment, and all that. The list is endless. We've just created a few here that would help you to know items that are indeed zero rated. So we're moving on to a big part that we believe is important for everyone on this call tonight is what is the impact of this reform on an SME business. We've spoken about this very one that we're highlighting, how you already know that once your annual turnover, or what you will call your gross earnings, is less than 100 million, then you are fully exempted from the CIT, from CGT, and the new development tax. You will also be able to claim impute VAT recovery when you have done services that are tagged. Remember I said it's zero rated, right? You will be able to claim VAT impute. um, let me just pick everything on. You get tax incentives if you decide to embark on agricultural business for the first 5 years. All taxable persons, provided you have a tax ID, you would be able to get a lot of contracts, and then you are tagged an identifiable person, and someone else will not be paying penalty on your accounts because you're readily identified. And if you're also carrying out business on your personal accounts, there's a reporting rule that Nigerian banks now have. We're going to be reporting certain transactions across different threshold, and then of course you can get exposed if indeed your income is more than 100 million. Let's look at the commercial business quickly. So by way of definition, if we were to give a definition to commercial business, we would say that they are medium and large scale enterprise. You do different transactions from trading to manufacturing to logistics to telecom, and your turnover exceeds 100 million. And then of course, your total asset is greater than, or your fixed asset is greater than 250 million. So in the new tax rule has provided additional clarity as to what is an income, right? So prices, winnings, grants, profits, and all that are deemed now chargeable. So you need to pay attention to that. There is an enhancement to the capital allowance. So capital allowance is what the taxman will give you in lieu of your depreciation, if you understand that bit well. It means that a taxman, when they come to review your book, they will disallow depreciation, but they will grant you capital allowance. So what the new tax law has done for commercial businesses, it has expanded the list of items that qualifies as a qualifying asset, and then it has also allowed you to carry forward losses or carry forward an allowance if you work in key sectors. We already spoke about the effective minimum rate that has been introduced, the 15%, if you're part of a global conglomerate or when your annual turnover is more than 50 billion. And for some specific sectors, the new reform introduces tax holidays, right, for agricultural products, for manufacturing, for renewable energy, for the ICT sector, and for export-oriented businesses. Then we already spoke about the stricter compliance that has come with the tax reform, is ensuring that everybody is accountable. The interest of the buyer and the seller is not the same, so everyone will come to the table, bearing the truth. So very important is because this cadre of businesses will pay taxes, right? Unlike the other SME business who will now be totally exempted from paying taxes, people in these cadre will pay taxes. And it's important for you to know because how you can effectively manage your tax is knowing what deduction is allowable to you. So if you're familiar with how taxes are being computed, you would determine what your assessable profit is. You would take out all your necessary deductions before you then have your chargeable income. So if you are commencing a business, right, if you have before your business has started, anything that you have incurred 6 months prior to the commencement of the business, is now deemed an item that you can allow. Prior to now, expenses, pre-incorporational expenses are technically disallowed. But now they allow you to take pre-incorporational expenses as an allowable expense. And I think that is a very good addition, for businesses that are just starting. As soon as you start to earn, every pre-incorporational expense that you have incurred, you can now have them as allowable expenses. R&D expenses that you have incurred, of course, subject to a maximum of 5%, is also deemed an allowable expense in the new tax law. If you can also show evidence of VAT and custom duty, now you will be able to claim your deduction. So if you can show evidence that you have done your filings and all your filings are complete and in order, you would then now be able to get deduction. I'm trying to rush now so we can go into the question and answer session. This is a very interesting addition. If you're familiar with the tax theory, you would have heard the word REN. So when a taxman comes to review your book. They are interested. If anytime they want to look at your book, they will tell you that, is that expense, is it reasonable? Is it all? Is it exclusive? And is it necessary? They want to be sure that your expenses have passed this test before they would then allow you to claim that expense. But the new tax law is combining everything into just two, because there could be argument as to whether something is necessary, right? We can also argue whether something is reasonable. The reasonability of an expense is subjective. So the new tax law is saying, when you want to claim an expense, or when you want to take a deductible expense, ask yourself two questions. Is it wholly? What does wholly mean? Did I incur this expense solely because of this business? If yes, it is allowable. Did I incur this expense exclusively because of this business? Then it's allowable. So the subjectivity of whether the expense is necessary, right, or whether it is reasonable has been taken away, because it's subjective. If I needed to incur an expense to move my business forward, it doesn't matter whether you consider it reasonable or whether you consider it necessary. All that matters is that I needed to incur the expense to ensure that this business continues as a growing concern. If yes, then the expense becomes allowable. If you are used to taxation, then you know that this is a big milestone in the tax law, because those two clauses of the necessity of an expense and the reasonability of an expense, you can have that conversation over 4 hours with the tax person and you'll be arguing. But now we are back, we're just down to two requirements. Is it only for the business? Was it exclusively for the business? If yes, then you can claim that tax. I think that is a good addition that we help commercial businesses. Another thing is donations. Proud to now, if a taxman will come to pick your books, they would disallow all your donations, right? And say that donation is not part of it. But the new tax rule, if you have donation, they have now become deductible. That is also an excellent addition in this new tax law. Yeah, there are a bit of things that you need to consider. Once we are able to determine the market value at the time of the donation, and we can also reliably estimate the consideration that was paid to acquire it, then it is allowable. This is also a big thing. So again, as a business, please, you can increase your donation or of course spend reasonably on donation. It will no longer be disallowed. Another new addition that is also very good for commercial businesses to note is the fact that doubtful debt estimates, that you have done in accordance with the IFRS requirement, right, is now also deductible. This is also a fantastic addition. Proud to now, the taxman sees doubtful debts in your book, is just going to disallow it and say that it's not an allowable expense. But if you have a doubtful debt that you have, because again, anybody's business, it is possible that things go bad and you indeed have a doubtful expense that qualifies as doubtful expense. So going forward, if you have a doubtful expense and it is computed and calculated in line with the IFRS requirement, it is adjudged allowable. That for commercial businesses, because tax principles and tax rules could be a bit complex, and so a lot of commercial businesses need the service of a consultant. And I listened to Taiwo Edele, who is the president of the reform committee, and he had said that prior to now, a lot of people, what they would just do is, oh, it is time to pay taxes. They just collect a tax consultant, and the guy just prepares financials that using his own head, not even using the bank statements, the financial statements of the organization, looking at the books that they've kept. They just prepare something arbitrarily and then submit just because they want to help a company to manage their taxes. But now, even for you to be eligible as a tax consultant, there are now tests that you need to pass. So it's not business as usual where people just come and say, don't worry, I'll just help you do it. You only pay 1 million naira. That's not what we want in the new Nigerian reform. What we're looking forward to is, if you have if the service that you have provided to Nigerians is significant enough for you to be taxed heavily, we'll tax you. And if the service you have provided for Nigeria is just small and we don't need to tax you heavily, then we leave you. So we're now going to be looking at tax consultants from 3 eligibility criteria. We're going to be looking at their competency. We want to know how competent are you to do this work. So there's going to be a poll, a registered website where you would see eligible tax consultants. If they don't pass that test, they will no longer be able to render the services to you. And it is very important that you note it. So they want to know, do they have knowledge? So they will do some slight assessments. We want to know, do you even understand what you are trying to teach people? Or what the person that you're trying to stand to defend, do you even understand it? Some people don't even understand the tax rules, and yet they want to be consultants, right? The competency test. Then they will be doing the self-compliance test. So for them themselves, their companies, have they filed their own taxes? Do they have tax clearance certificates? You know, we want them to practice what they preach. So we're going to be looking at the proof of their own payment. So they're going to be uploading it on the platform, also certifying that they themselves, whether they are small companies or large companies, whatever category they fall into, they must be able to prove to us that they themselves can pass the self-compliance test. And then we want to know their integrity checks. Again, this is what the new tax reform said, doing with tax consultants. So we want to look at we want to do ethical screening for them. We want to do background checks on those ones. Are they ethical people? Can we trust them? Are we going to say that these people can be trusted themselves? So we look at their background, look at the things they've done before. If it is a company that we have seen that has done just giving 10 million or 1 million to people, just go and pay, and then they bribe someone in FIRS and then they clear them. We want to know their track record. And they must also meet the anti-corruption and professional conduct standard. So that's the new addition. They're going to be running that anti-corruption and professional conduct standard on them. And this is just to ensure that we have credible people, and then there's improved transparency in the system. So please note that. Now let's go to e-invoicing. E-invoicing is also another wide concept that was launched. Remember, if we were in January 2026, I would have been talking about NRS. But because we're not yet at 2026, we're still speaking to the Federal Inland Revenue Services. So they launched this platform. It's they faced the national e-invoicing regime. It was launched in July 2023. What are we trying to do? They want to digitize VAT invoicing. And the reason why they want to do this is for tax compliance. This was launched for companies whose annual turnover is from 5 billion upward. They are adopting the electronic fiscal system. It's called EFS. It's electronic fiscal system, and it is through the FIRS merchant buyer solution. Again, I know this will become NRS, the merchant buyer solution. What will this platform do? Quickly. So it's a digital platform that is developed by them, and it's going to be used majorly for e-invoicing. What we want to do, or what they intend to do, is they want to generate, validate, and transmit invoices real time. So what they are doing and piloting with companies whose turnover is greater than 5 billion. Of course, the Nigerian Financial Institution is part of that pilot phase. We want to see all services that you want to see invoices generated, by this large corporate and to this large corporate, all together on one platform. And then, of course, once they are able to achieve success with the large corporate, they will then move into every part. Again, transparency in VAT collection on a real-time basis. NIRS or FIRS now can predict what VAT has transpired, whether it is input that is coming to them as recovery or payable that's coming to them, that is income to them. So key function is just electronic generation of invoices. Businesses will create their invoices now on that FIRS MBS platform. There will be integration of that platform to the relevant big corporate accounting system through APIs. there will be invoice validation, and there will now be a unique number that is generated with a stamp. And then, of course, with system integration, they're able to achieve that. What is this e-invoicing trying to do? We want to ensure that we're able to increase, there will be increased exposure to the tax authority again. So this is also for FIRS, the soon to be NIRS, to also ensure that their platforms are robust so we don't have cybersecurity issues. But what would they be doing, or what will be the impact? There will be constant monitoring. So businesses will be exposed to oversight, constant scrutiny of transaction. As you are doing transaction, they can already tell the buyer, the seller, all exposed to one platform. They can already see the VAT implication of all your transaction and see through them. The challenge that you could have is if you do not have the necessary technical expert, it could then be a challenge, but then it doesn't still mean that it can't be done. There could be cash flow strain for organizations that, because again, this has cost implications. For the large corporates that are adopting now, there's a middle person that has to do that integration. There is those middle people are approved and they also charge. They also bring in their charges. So for small companies, it might be a challenge trying to get them onboarded on that. Yes, there are concerns around data breach, information security issues and all. And of course, we already spoke about the cybersecurity challenges that could come with it. What are the recommendations that we have today before we go into our questions? The first is you need to understand your kind of business or your type of business. Know where you fall. Some people don't even know how to determine what their gross earnings is or what their annual turnover is. As we are saying this call now, if you don't maintain proper book of record, you will not be able to even tell whether you're a small company. It's not for you to assume that, oh, with the small transactions that I'm doing, I don't think I'm a small company. That's not what we should be doing. It's an imperative for you to know what your turnover is. Get down to it. There are free softwares that you can use to gather your accounting records together. So please know the kind of business you have. You need accounting softwares. There are a lot of free accounting softwares that you can, go online, just read up about them. And if you need the service of an accountant, please, by all means, get it. If you need to understand how to use Excel to be able to, keep accurate record, please pay to get it, so that you can adequate, because it's going to be compliance. If your self-assessment is not correct, then you get sanctioned. And everybody's record, I'm not sure any of us now does not have a BVN on the call. If you don't have, maybe there's an irregularity with yours, I'm sure you're already struggling to bank. So it's going to be that way. It's going to be, they are able to identify you to the letter, and there will be no hiding place. So if there's anything that you need to do now is to ensure that your record are in place. Adequate documentation. If you would be able to claim a refund, then you must be able to say that, oh, I kept my record. So as you are doing your transactions, transfer them to electronic format, because it will not be good that people are getting, you have someone doing the same business as you're doing, they are getting their own refund, they are making more money for their business, and you're struggling just because you can't keep record. So adequate documentation must be your priority. Professional guidance and leverage. So again, we have spoken about what professional guidance can do for you. They are scrutinizing the accountants in that space that provide that service. And I believe that we can always leverage on the ones that have passed. And when you're thinking expansion as a corporate business or as a commercial business, think of expansions into areas that can give you tax incentive. So when you're thinking about expansion, think about tax incentive. Then for tax update, it is very imperative that you stay informed. Again, what we have said on this call, it may not be all exhaustive. We've just picked basic things that we believe is important for you to note. But attend webinars, be part of things that are happening, stay online, and ensure that when you are online, you are part of things that will profit you, right? It's not just scrolling away. As a business owner, you can't afford not to know. Information is very key. The difference between knowledge and lack of knowledge is very wide. And so you have to stay informed. You have to ensure that as the rules and the regulations are being enacted, you understand the implication for your business and you act accordingly. Let me go to the conclusion so we can go through our question and put everything together. Remember that there's a relief for you as an SME, so please ensure you take advantage of it. Remember that compliance is key and you have to keep good record. Remember that strategic planning, you can't afford to do without it. Early adoption remains an advantage for you, and there are a wild list of tax incentives that you can take advantage of. I want to say thank you to everyone for listening. We'll move to the question and answer session. Thank you.
Thank you so much, Madam CFO. I took so many notes. I've learned a lot about tax that I have in my entire life, if I'm being honest, and I'm sure a lot of people on the call can say the same. We're going to go into our questions now, but I think I'll get the most obvious one out of the way. Everyone is asking for the slides. So are you going to share them with us, or do you have a summary or some notes that perhaps you can share that we can distribute on our different platforms, if that's okay with you, ma'am?
Happy to share. Happy to share.
Okay, of course. So that answers that question. So I would start with, I think Obina has his hand up. Are you able to speak at the moment, or should I start with the ones in the chat? Obina, are you on the call?
Yeah, I'm on the call.
Okay, please go ahead with your question.
All right, thank you very much. It's quite an engaging session. The funny thing is, I just closed from work, and I just saw the link on my friend's status. Oh, this is on task. I need to join. So, but straight to my question. Sorry, I wrote them down, so it might require me to just read them up as fast as possible. The first thing is the task filing system. Under this new tax law, as the case may be, now for SMEs and all that, is there a way to make it easier to file the tax? Is it that we all have to go to the NRS office to physically file this tax ourselves? That's the first one. Then the second one, um, okay, what if I don't pay like in things like a NHS, NHIF, or pension? How do I design the financial structure in a way? Because the only thing I saw in the tax stuff that allows deduction is just the rent relief cap at 500,000 there. But for those of us who probably we don't pay for NHS, that's a national health scheme, NHIF, or pension, how do we factor this as in some of the allowable deductions? And then the third one is like we have dependents, like I send money to parents or children or other relatives, as the case may be. Does that covers the allowable deduction under donation? I don't know. Probably maybe donation can only be factored when we donate to registered NGOs. But what if I'm donating probably to a family or to a cause, maybe an accident victim or school fees, or student organizations coming to seek for support or funding, as the case may be? Then the fourth one I'm looking at here is the allowable deduction for research, because I'm actually into research, but into social research. I don't know if that's also covers and those of us into social research perspective, probably in political research, as the case may be. That the sorry, my question is a lot. Sorry. Then for rent, does rent cover repairs on tear and wear? That is in my business. You say run. Is it only? Is it justified, as the case may be? Like if I have a business I'm running, does it cover the cost of tear and wear or repairs I carry out in my businesses? And then let me go to the final one. Then the three-tier eligibility test that was listed earlier on, I actually went through it. It talks about the competence, and it talks about you also talked about being able to pay your tax regularly, and I think you also talked about, I'm trying to remember the last one, but the question I'm trying to ask, it does not specify that the person must be of any professional body like ICANN or probably study accounting or financial taxation. Does that mean that anybody can actually get the license for to be a tax consultant, as the case may be? Thank you very much.
All right. Thank you so much. Excellent questions. Excellent questions. Eddie, do I answer each one as it comes? Is it okay to proceed to answer?
Yes, please. Of course, ma'am.
Okay, thank you. So your first question on tax filing. So we don't have to go to the tax office office to do tax filings. So there is a platform called Tax Pro Max. On Tax Pro Max, you can do your filings in the comfort of your house without stress, and you do your filings easily. So you just have to get onboarded and you'll be fine. So you don't have to go to NIRS office, to do this, or let's still call them FIRS now since the name has not changed. Then you went sweetly into computation of your personal income tax. I suppose you run an SME business. So rent relief is still there. Yeah. So what is going to be happening going forward is that you're going to get you're going to be able to produce your rent, the let me say a lease agreement or something that, or a contract agreement with your landlord that shows that you have a contractual rental agreement with them, and with that you will be able to claim your exemption. You also spoke about you not having NHF, neither do you have pension and all. Yeah, those are allowable deductions that you can have. If you don't have that, then of course you may be forfeiting those allowances. It's okay if you want to. So if you are a small business, you can register to do voluntary pensions, and if you have voluntary pensions, they would qualify as allowable deduction for your personal income tax purposes. But yes, you can get your tax, your relief and all that. Then you spoke about having dependencies, or if you did donations. So again, you remember that the filing for your business and the filing for your personal income tax are slightly different. So if you have donations, donation won't come into the PIT bucket, except if you have life assurance and every other one that you then qualifies as deduction. So donation will fall under when you are preparing the financial statement of your business. And then now that the tax rule allows us to do donation, provided it is directly attributable to the business you're doing, then I believe that you will be covered. You spoke about research and development. So yes, research and development is an allowable expense, provided it doesn't pass 5% of your net profit. So whether you have incurred it for political purpose or not, provided you can trace the research and development expense to your business, it becomes an allowable expense. Then you went into the qualification for REN. Remember I said that from January 2026, we'll no longer be discussing REN with our tax auditors. We'll be discussing WE or WE. Is it only for the business? Is it exclusively for the business? If yes, that expense becomes allowable. We're not thinking about the reasonability any longer, neither are we thinking about the necessity. So that is a big gap, and I believe you will be able to take advantage of them. Then you touched on a very important thing, which was your last question on whether you would have to be registered as a professional before you become a tax consultant. So typically, it is a registered accountant that it can become a tax professional. So yes, I didn't mention that, but it's very important. Not a doctor can't just wake up, except if the doctor then decides to do the finance profession. So that base requirement is taken for granted. So yes, you have to be a registered accountant, then you can be a registered tax professional. I hope that helps.
Oh, yes, it does. Thank you very much.
Thank you, Obina. Thanks for your question.
Okay, thank
Eddie,
you.
please help me. What's the next one? Okay.
Yeah, so we have Mr. Wale, if he's on the call. Please, you can go ahead and take your question.
Okay, my question. Good evening.
Good evening, Mr. Wale.
Yeah, thank you. I want to inquire what's the category of executive fall into. That's I think
Okay, I can hear you clearly. I don't know whether it's just from my side.
okay. I want to inquire about the
Okay.
cooperative society. About the cooperative society. What
Okay.
category of exemption do they fall into, or what's the percentage of tax they are meant to refund back to the new tax group? What category do they fall
Uh,
into? So I think the other one I have is already answered, and it's about that tax pro max. So if one
okay.
can find in one compost, but I think I'll have to explore that. What category does cooperative society fall into? Thank you.
Okay, thank you so much. So a cooperative society would typically fall under small company. However, some cooperative society have also grown very big. Again, the criteria is very clear. If the turnover of the company is more than 100 million naira and the asset, the fixed asset of the company is greater than or equal to 250. So it's same for the cooperative. If the cooperative operates below this limit, then it's tagged the small company and the small company requirements are applied. If the cooperative is higher, then the cooperative will be deemed a big company and then will pay income tax, 30% plus the new development levy. Thank you.
Okay, thank you. I hope that answered your question. Okay, seems like it did. So we have Mr. Essien. Godwin, please go ahead and take your question, please.
Good evening, Aditutu. Good evening, everyone, and thank you for this conversation. Very, very interesting. Please, my question is on the area of the knowledge based. You talk about the compliance aspect that the tax man must have, that he has there has to be compliant knowledge test and self test and integrity test. My question is, who now regulates this knowledge aspect? And secondly, what role would CITN has to play in this regard?
All right. Is that all the question? Do you have another one?
No, that's all. That's all. Thanks. Thanks.
All right, thank you. So the regulation of the type of assessments that will be done for tax consultants, it will still be under the purview of the NIRS. CIT, and so when we talk about accounting profession, whether you have ICANN, you have ACCA, you have CITN, they are all professional bodies. So once you have your certificate, that gives you the base level. So it's just like an entry level requirement. Then you then have to pass this test. And you and I know the reason why they have decided to go this route. I personally believe that is an excellent one, because prior to now, people could just get away with a lot of things, and people do tax evasion, for a living. So with this new introduction, everybody is held accountable. Nobody wants a license to be collected from them after they have labored. So once, and then according to Mr. Wale Oyedeji, we'll go onto that site. If we find you not accountable, we'll delist you, and we'll publish that this particular person, we can no longer have services with the person. When people are held accountable on that level, then things will get better. So all the accounting bodies will work together, whether it's ANAN, whether it's the taxation body, whether it's the accounting body, whatever those bodies are, they will work together. But this qualification criteria is going to be anchored by the new NIRS. I don't know whether that helps you, sir.
Excellent. Thanks so much. That's okay.
Thank you.
All right, thank you. We'll take a quick break from the people that have their hands raised to just look at some in the chat. Miss Kemi asked a question. She said about the tax. Are you saying we can get back our VAT paid to clients? For example, VAT added to rent for office use.
Okay, yes, if you can claim that if you have passed all the criteria, again, we're always careful before we say yes to a tax question, because it can be yes, it can be no. So there are criteria that you have to meet, and you have to check whether you meet those criteria. Remember that if your item is under exempt, then you can't claim VAT returns, right? But if the item that you have provided is zero rated, then you can claim a tax refund, a VAT refund. So first of all, identify what sort of service is it that you have rendered. Is it an item that is adjured, zero rated, or an item that is adjured, exempt? If it is exempt, no refund will be given to you. If it is zero rated, then you will get a refund. So that's how it's been classified.
Okay, thank you very much. Another one from a Funshaw Tuki. She says, thank you for a great job, dear Adetutu. Asking just to be sure, will the CIT payment for 2025 due in 2026 or any other 2025 related payments due in 2026 be affected by the new tax laws?
Beautiful and excellent question. So the new tax law is going to start in 2026. So the tax payments will be in 2027. We all know that tax is on a preceding year basis. So all the taxes you'll be paying in 2026 will still be with the laws that were effective in 2025.
Okay, thank you very much for that answer. We have another question. Again, forgive me if I butcher your name. Mr. Igbadu Folake. He says, good evening, madam. You have done amazingly well. I have a school and I have done my CAC. I have been paying to LIRS. Do I still have to pay FIRS? Also, what is the difference between LIRS tax ID and FRSC TIN?
Beautiful question. Thank you. I believe it should be Mrs. Folake. Okay, so your payment that you currently do to LIRS is not going to change because I believe you're talking about the personal income tax for your employees. If your employees are residents in Nigeria, in Lagos, then you continue to pay their taxes to LIRS. So you don't need to pay to FIRS if your employees are in the Federal Capital Territory that you would have to pay to FIRS. Your second question as to the difference between the LIRS tax ID and FIRS tax ID. Now, this confusion is the reason why they've decided to merge it together now and just call it tax ID. So whether your ID is from the LIRS or from the FIRS, it qualifies as a tax ID, and then you're fine. You can still continue to use that tax ID. What they're just going to do going forward, when the law becomes enacted, it will just graduate. If you have a team, it's not going to be cancelled, but for an individual, they just switch over to your national identity number. And if you have a registered company or a business name, they switch to your RC number.
Okay.
And according to Mr. Oyedele, he also states that he wants it to get to a time, their proposal is that it will get to a time where they can identify you with your phone number, but that's not in scope for now. But yeah, it will get there.
Okay, thank you. Mrs. Falake actually had another question. She said, also, as a realtor, who will pay this tax of a thing? Will it be deducted from my account or the payer's account or the tenant's account? Thank you.
Okay, so it is whoever, so depending on what you do, so as a realtor, you collect money as an agent. If you have received money as an agent, then it's a commission in your hand, right? Then it's taxed in your hand, right? If you have, so depending on which area of the service that you have provided, right? But if it is an agency service that you have delivered, then it is taxed in your hand because it is income to you.
Okay, thank you. I want to go back to the individuals raising their hands, but I've seen a very interesting question in the chat from Mr. Emmanuel Babatope. It's a long one. Please allow me to read it. As we approach January 1st, 2026, when the new Tax Act is set to become operational, could you please share what specific measures Optimus Bank has already implemented or is currently developing to ensure a seamless transition? In particular, how is the bank strengthening its digital infrastructure in areas such as APIs and integrated dashboards, e-invoicing, WHT auto deductions, and advisory tools to support individual customers, SMEs, and corporate clients with needs such as TIN verification, WHT, VAT processing, and incentive claims? I'll pause there so that you can go through that one, and then I'll move into the rest of the question.
Okay, Mr. Babatope, thank you so much. And you can imagine that Optimus is a very forward-looking organization. I'm sure that this webinar already puts us in a very good light. If we did not want our customers and prospective and new customers to be aware of the tax regulation, I'm sure that we won't be hosting this webinar. So this webinar that we are hosting already puts us forward as a forward-looking organization who is concerned about the well-being of its customers. So that's one of the things that we're doing, or that we have done, to ensure that we are compliant. We are, like I said when we started the presentation, we are part of institutions that have been tagged large corporate, who has a turnover of over 5 billion. And so therefore, we're already integrating our platforms with third-party system. We are going to go live, and we're going to be compliant with the e-invoicing mandate. It is effective November 1st, and you're going to be seeing Optimus in the forefront of that. We already have a vendor that is working with us to ensure that we have all this support and we're able to transition seamlessly into the digital tax era. Also, you're speaking to advisory through advisory. One of it is what we're doing today. What we do in with our businesses is that we also try to advise our customers. We let them know what is due to them. If you are to probably do a loan request with us or open an account with us today, we're going to be explaining to you. So we do advisory. We're not just interested in making money from our customers. We're interested in ensuring that our customers are educated and they are informed. When I also made the presentation, I already said that we have an obligation as a bank. The obligation is going to start in 2026, where when an individual uses their account for business purpose, we are also supposed to disclose such individuals, right? Again, you know that we are going to be rightly connected to FRS platform, and some of those things they can already see it themselves. So we're going to be doing those reporting, highlighting customers that will be using their business. Going forward, we won't even be able to open an account for you as an individual or as a business owner who does not have a tax ID. So we are a very compliant institution, and we put our customers first, ensuring that they are able to understand the implication of this tax reform and that we journey together. So that's actually what we're doing. Thanks for your question.
Thank you so much. That was perfectly said. I was going to read the rest of the question, which talks about client growth and business enablement under the new tax regime, but you have done a wonderful job with answering the entirety of the question. Thank you so much. We'll move back to, I know that there are more in the chat. We'll move back to that, but for just a second, because people have their hands raised, I would now like to call on Miss Bella or Mrs. Bella. Please go ahead with your question.
Thank you so much for this session. This was very enlightening, and thank you to my account manager also who sent me the link. I wasn't even aware of this webinar I was holding. Okay, so I want to ask the question. I own a bookstore, and I recall during the course of this conversation, you mentioned that educational materials are not liable to be taxed. I want to know, for someone that has like a bookstore where I sell like, fiction, non-fiction, Bibles and stationaries and things within that bracket, am I exempted as an educational, so because I know that when I was getting my TIN number, okay, let me just ask the question. Just answer, then I can know if I have a follow-up question. Thank you.
Okay, I'm trying to get to the slide where we have, I think everybody seems to be interested in that slide where we have the withholding tax items that are eligible. Okay, so I'll stay on the zero rated items. So you said you have educational books and materials. I'm happy to announce to you that educational book and materials, they are zero rated. And therefore, because they are zero rated, you would not have to, VAT on it is tried at 0%, and you can claim impute VAT on it. So, you're thoroughly and perfectly covered. Just ensure that all the things that all your invoices that you use to purchase those books, the VAT on them, you can claim it. And in 30, again, that's from next year. And in 30 days, the new NRS has promised that they would give you this refund. And I'm very optimistic that they will keep to that promise.
Okay, sorry. one more question before I leave. So are you saying that because I don't sell books for students, so you're saying like for like fiction, non-fiction, they're also part of the educational books category, right?
Yes, yes,
So
they
which
are.
is the only tax I'm liable to pay is like company income tax.
So if your business is deemed big and you're not small, then you will pay company income tax. I don't know the turnover of your business. If your turnover of your business is less than 100 million, then you would not have to pay company income tax.
All right. Thank you so much. Thank you.
You're welcome.
Thank you so
Thank
much,
you.
Ms. Bella. We have Mrs. Esther. Please go ahead with your question.
Alright. Good evening, everyone. Thank you so much, Aditi. So, I mean, high compliment also that you talk so nicely, and the other person, the Optimus Bank meeting host, you sound really nice. So,
Thank you.
my question is, as an influencer or an actor or content creator, where do you fall? Are you where do you fall in the in the old tax bracketing stuff? And also, as a Nigerian who stays abroad but has a running bank account in Nigeria with their BVN, but they don't do any business at all in Nigeria, where do they fall? How do they pay tax?
Okay. All right. Thank you so much. And I like your questions. Thanks for your kind compliments. We really appreciate. Okay. So if you are an influencer um, and you earn income in Nigeria, and we can also adjudge that you have stayed in Nigeria for more than 183 days, then you will be taxed in Nigeria. So we will then take you back into whether you are a small business or a big business. If your turnover from your influencing job is lower than 100 million, then you are
I have
judged
account that
small
have
business,
come on, let
right?
me
Then you will
from
not pay any form of tax.
Lagos
The
Bank.
only
It's the
tax you'll be
SME.
eligible to, Mr.
It's the bank for
Olumide,
SME.
just go on mute. Yeah, the
Jesus.
only tax that you'll be eligible to pay, the only tax you'll be eligible to pay will be your personal income tax, and that will be it. Your second question, also very instructive, because there's been confusion as to this new regulation of your bank account being publicized and all. What would happen is it's not, if what goes into your account probably is a gift or you just get money or you transfer to yourself, no one is going to report it to any tax authority. Your account is personal and it will remain personal, because if you earn income in your account, provided you've paid your PIT, no issue. It's not a surveillance or a narrow board into your personal account. No, what they're looking for is taxable income. So where an individual that is an SME have decided to, rather than put income or earnings that belongs to the business into the business account, and have diverted such monies into their personal accounts, that's when they are being touchlights. I don't know whether
Okay,
that's
no, my yeah, that's I understand that, but my question is, as a Nigerian who lives outside the country, you don't have
okay.
any business running in Nigeria, but you have a Naira account and you have
Mhm,
a BVN.
mhm. What happens to
Okay,
you?
but you're a
Nothing.
Nigerian.
It's
Okay,
fine.
nothing. You are not taxable.
Nothing. No, if you don't earn income in Nigeria, you just use your Nigerian account. No, it's okay. You're fine.
Okay. All right.
Yes.
Okay. Thank you so much.
Thank you.
Thank you.
So, Mr. Sampson, please go ahead and take your question. Are you still on the call?
Yeah, can you hear me?
Yes, we can hear you. Please go ahead.
Yeah, yeah. Thank you, Aditi, for the insightful presentation. I really love it. My question is, I want to ask one first of all, I'm a solar installer. I have my small SME, small office like that to do my installation. And my question, I'm being skeptical. What about I have a contract worth 10 million naira. Am I going to be charged on that 10 million naira, or after the reductions, components buying and every other thing will be charged, or based on profit? Is that I'm just being skeptical? Is it on the money that was transferred from my clients to my account that will be charged on, or I'll be charged on my on the exempted or what's it called, component that I bought from that money?
Hmm. All
Yeah,
right.
and the second one is, okay, what if I have an account? I don't have, in my company is registered, but I don't have a corporate account. I have a personal account that all the money a client sent to me for business and contract is being transferred to my personal account. Am I going to be penalized on that? That's the second question. Thank you very much.
Okay, Mr. Sampson, thank you so much. And I'm happy to announce to you that you are the one that they are looking for, but you're not going to be penalized. Let me first advise that if it is possible for you to go to a bank and open a corporate account with your business name, provided you're, in fact, you should open with us. I have the head of our personal banking, the person of Damilola on the call. It will reach out to you and we will open a corporate account for you. I'm very optimistic that you have all your requirements and we can open a corporate account for you. However, with the way you operate your business now, it means that your company, the proceed from the things you do for your company goes directly into your personal accounts. And like I said, you are actually the target. You're part of the people that are being targeted. No one is going to um, just go into your account and say the 10 million naira that your clients paid you, you should pay tax on it. Nobody pays tax on gross earnings. You pay tax on accessible profits, which is um, after you have taken. So even though they may flag you, what you then say is, oh, this service that I've rendered, even though this person has paid me 10 million naira, I expended 8 million to do the job. You will also show it with evidence. So we take the 10 million, we'll subtract 8 million from it. It means that the profit you have made on that transaction is 2 million. Therefore, you pay taxes on it. But I also have good news for you. I am not in any way limiting your solar business, but I don't know whether the total income you make from that solar business is up to 100 million naira. If it is, then it's well and good. But if the money that you have made from that business all through a particular year is not up to 100 million, then the good news for you is that you're not eligible for taxation. Therefore, your 10 million in your account, the 8 million you have spent, the profit of 2 million naira, it is all for you. You can enjoy your life without anyone stressing you. But if that money, Mr. Sampson, if your company, if we do the account of your company and we discover that your profit is more than 100 million, then welcome to the new era of taxation. You pay the company 1,030% or whatever is revised to, plus a new development levy of 4%. So that's what the new tax rule allows you to do. So on the corporate account, our head of personal banking is going to reach out to you. Thank you.
Okay, thank you very much.
Thank you.
All right. Thank you. We have Mr. Boyo. I think he had his hand raised and I must have skipped him because there were a lot of questions. You can go ahead and ask a question now, sir.
Yeah, okay. Good evening, everyone.
Hi, good
Good
evening.
evening, Madam Adetutu.
Good evening,
Thanks
Mr.
for yes, thanks for your brilliant teachings and exposition this night. Yeah, my questions, I think two questions I have. The first question is that I need a clarification, regarding what you said earlier. Like for somebody like us that runs in oil sector now, oil industry, precisely our business line is petroleum product marketing, and you know that it's quite capital intensive. I need to let you know that even, I mean, a month with your banks, we do no less than between 500, even up to a billion, turnover, right? But like I said, it's quite capital intensive. So maybe out of this money, because just marketing, just trading. So our what's it called? Margins might just be 0.1% of all these kind of things. So now, if the profits and all of that is less than 100 million, that's by in aggregate, are we going to I mean are we entitled to pay withholding, I'm sorry, company income tax and all that? That's the first questions. Or are you saying that, it's about a turnover, a monthly turnover? That's one. Then the second one, sorry, the second one is that um do we at the point, so do we need to pay fat also on that? Remember, I talked about company income tax, then fat. Petroleum products, marketing products eligible for these fats and all that. Thank you very
All
much.
right. All right. Thank you, Mr. Samuel. And it's so good to know that you bank with us as Optimus Bank and that you're doing quality business with us. Thanks for your patronage. So
Well,
to
listen
answer
to
your
the account
question,
officer.
say that again. Pelumi. Okay. All right.
Yeah.
Thank you. All right. So, fortunately, I would like to say unfortunately, the new tax rule categorizes you. If you already concluded that you do turnover in excess of 1 billion, then congratulations to you. You are a big company. It really doesn't matter what the income that you have is. In terms of categorization, you are a big company. But then there are a lot of incentives that you can then get. And then remember that the taxable income is not the same as your profit. So after preparing the financial statement of your organization, deducting all relevant allowances. Remember that I spoke about it today, that donation is an eligible deduction. I spoke about it today that even if you have a bad debt written off now, provided it follows the IFRS requirement, it is an eligible deduction. So it is not that gross money that were charged, that taxes will be charged on, is going to be the net after all your relevant deduction. But from the description that you just gave for your company, you are a large company. Now, to whether you should charge value added tax on your services, now you need to determine which part of the business you're in. So, if what you're doing is so that I'd shown a template earlier, but one of the slides that had supplies. So, depending on the type of supply you are doing, I really don't know your line of business.
No,
Then,
what we do, sorry, ma, what we do basically is trading, is petroleum product trading. Like, for
okay,
instance, we buy from some of these depots and refineries, and in bulk, in PFI, bulk purchase. So other off-taker, middlemen or what have you, they will come pick it from us. So we are not directly involved in logistics or supplies or anything. Our own is just to buy, sell, trading.
Okay, so because what you do is trading, then yes, it is deemed that you're rendering a service and you should add a value added tax to it. So because what you do is you do buy, sell, and you do purchase. You don't produce, you're not an oil production company. So because it is an intermediary service that you are doing, then there is a value you are adding to that service. Therefore, you charge the 7.5%. Now, what you should be looking at is, are you able to claim back your own input? So just look at where you fall.
We
Um,
don't.
you are not able to, if you're not able to claim it back, then yeah, but then you are eligible to charge.
Ah, that'll be serious, though. No, you see, madam, sorry, please, for the sake of having you now, you see, what we do is very realistic. You can imagine that filling station behind your where you reside, your office, and all that. You understand? It will be difficult for people like us to, like, okay, I mean, Dangote or what have you, they put daily what's it called, ex depot prices on the internet, so everybody knows, so there is no way. Okay, for instance, maybe the lifting product ex depot is about 830 before you get to the other hand, so there is no way we can say, okay, 830 plus. I don't know if this has been my problem all along. You understand what I mean?
I understand you. Let me tweak it a bit, right?
Okay.
Because you said you're doing sale and purchase, and I'm struggling to see where to put you. Because oil and gas exports, crude oil, feeds for all gas produced, they are actually exempt. But you are a middleman. Again, we can look at it holistically to know where to place you.
Ah.
Then oil and gas products.
But the thing is, that filling station man in your place, he will not. You understand? Because he will not want to adding that 7.5 to talking about a truck that worth almost 50 million naira. You understand? With already regulated price, so these are the problem. I'm just saying it out having you, and you are my banker. You understand? So that's why I'm saying all this.
I
So
understand you. I
Hello,
understand you. So
Madam, sorry. Madam, sorry, please. Can I just come in here because I'm from the midstream.
all right.
I think the simple question, maybe what he's trying to ask is,
Okay.
just like in the course of your lecture, you told us crude oil is exempted.
Yes.
Some other oil and gas export items are exempted. I think what he's trying to find out is petroleum products like diesel,
KMS, yes, AGO,
PMS,
diesel,
fuel
petrol,
oil,
and all that.
those
ATK.
kind of products, are they VAT exempt or they are liable to VAT? I think that's the question, because as a producer like me, I'm a modular refinery, I produce diesel. I wouldn't know whether he falls within the category of my off-taker he picks from me and he tries to sell. Me, am I supposed to charge him VAT on my diesel when he comes to buy, just like going to Dangote to buy? If I charge him VAT, it means when he's selling, he might as well charge VAT. But if the law exempts fuel oil as a product or diesel as a product from tax, I will expect that he will also be exempted. He wouldn't charge his customers.
Exactly. That's what I'm saying. Thank you, sir, for that. Because me and you know that it's difficult for us. Sir, thank you for coming out for me. It's difficult for us. You can't just charge that filling station man. They will not even understand.
Okay,
There's no
so
template for them.
I understand you absolutely. Again, I'm not going to sit here. I didn't do the tax refund. I just read the tax refund as you and I. You also may have read it, and then we're making interpretation. So yes, I've gone back to the slide so that you can see the things that we have written. Crude oil products are actually exempted. Now, the rule is not clear as to what happens to middlemen, but then I think we can safely land on the fact that if baby products, oil and gas exports, and crude oil and gas feed products are exempted, then we can safely say that you may be exempted or you will be exempted at this point. Again, this are the very early stage of implementation. When we get to 2026, some of these things will become very clear. But honestly, we can take that safe position at this point because at least the pronouncement clearly states that crude oil products are exempted. So let's stay safe with that, so that we don't give you unnecessary rattling. But it's fine. I think we can.
Thank you so much.
Thank you.
you so
Yes,
much.
madam.
Thank you.
Sorry.
Thank you
Yes,
so much.
ma'am. Hello, sorry. You are very, very correct. And it's a very correct conclusion. Why
Yes.
do I say this? At the time, it was really neither here nor there. We were having problems with off-takers. Some would say it's not some. But if you remember, when this present government came into power in 2023, about when prices started going up, one of the palliatives the president brought in was when he exempted diesel. Between October 2023, he said 6 months, he exempted diesel from VAT.
Yeah.
But when we notice, that means before now, diesel was liable to VAT.
Yes.
But what we notice is that from that time till now, he has not made any pronouncement.
Yes.
He hasn't reversed it and said, okay, 6 months has expired. He hasn't said anything.
Yes.
And I think with this caption, crude oil products, actually crude oil products is the same thing as petroleum products. What that means is that whatever comes out of crude oil as a product is
Absolutely.
exempt. Is exempt from. I think we
That's
can run.
that's how it should be. Otherwise, there'll be a problem.
Absolutely. Absolutely. Thank you so much for your interesting contributions. Very topical ones, and yeah, indeed, good conclusions. So honestly, I stand with you in this matter.
Thank you. Thank you for those contributions and those questions. We do have to try and wrap up very quickly. We want to close by 9, so we can allow people to get to the rest of their night. But if you have any more questions, please direct your questions to smebanking@optimusbank.com. I'm going to put that in the chat. You can just use tax reform session as the subject line, and then you can go ahead and ask your question in the body of the email. We do have 2 more hands raised, and they have been up for a bit. So we'll take those 2 questions, and everyone else, please address your questions to the email that I'm going to put in the chat. Crown Fourth Consults, your hand is raised. Please go ahead and ask a question.
All right, thank you so much for the insightful session. My question is that regards startups, startups that are probably still bootstrapping. In a case whereby we need to file tax, since we've been told that taxing is going to come from our personal account. So what happens to taxing for a company that is not yet making revenue? And what happens in cases where we need a tax clearance certificate? How do we go about that?
All right. Thank you so much for your question. For Miss, I don't know whether it's Miss Malcolm, Miss or Mrs. Okay. If you don't make profit yet in your business and you're currently making losses, you are going to be exempted from tax. Again, we can't. The taxman can't tax what does not exist, right? So it's going to be exempted. And with the new law, you are also allowed to carry that loss over until you are able to recoup it. So, and then you can get tax clearance certificate, because what would then be on that form will be that maybe there will be a flag that your business is not making profit yet and all that. So whatever clearance that the taxman is supposed to give to you, they will still be able to give to you. The only thing is that they want to ascertain that indeed you are making a loss. You know, you may have declared that you're making a loss, and then when the taxman is done with preparing your financials, it could be a taxable profit, but then it will then swing to whether you're a small company or not a small company. So with all that in hand, you are fine. If you make a loss, you can carry it over for a bit, and you can get your relevant clearance as and when due. Thank you.
All right, thank you so much.
Thank you very much. Another hand that is raised, Miss or Mr. Uloha. I don't know if that was the right, but if you are the one, please go ahead with your question.
Hello, did you call me?
Yes, I did. Well, I attempted.
Okay, no problem. The question I wanted to ask was, because I heard the speaker mention something and he was contradicting what I have always thought. So the company income tax of businesses that are making over 100 million is on the profits and not on the revenue.
Is annual turnover. Annual turnover.
So annual turnover, is it like annual profits or is it annual gross revenue?
It is revenue, not profit.
So it's on your revenue, not your profits.
Yes, that's the criteria. So 2 criteria. One is your annual turnover, and the other is your fixed asset.
Okay, thank you.
Thank you too.
Okay, thank you very much. We have a Miss or Mr. Giwa. Please go ahead with your question. Okay, I'm not sure he or she is still on the call, so we'll have to move to. Are you on the call, please? No, I don't think so. We keep getting more hands. We only have 2 more minutes, so we'll move on to Khadija. Please go ahead with your question, and please, if your question has already been answered, then it doesn't need to be answered again. So If that's the case, you may just lower your hand now. Khadija, please go ahead with your question.
Good evening, everybody. I think I've mixed it up a little bit. Someone just mentioned that she asked for clarity on the taxable income, whether it is 100 million total revenue or profits. And you said it's for the total revenue. So I'm asking, the tax, is it going to be calculated on the entire income, I mean the revenue, or on the profit from that business?
No,
Keeping in
so
mind that, okay,
no, finish. Sorry, finish.
in
Go ahead.
mind that total revenue is over 100 million. Say from that 100 million, say the total revenue is about 120 million, and the profits is maybe 10 million or 20 million. Which will be charged? Which would be calculated tax on?
Okay, so I think we're mixing a few things up. There is eligibility as a small company, and there is the profit that you have made as a company. When the taxman wants to determine whether you are indeed a small company, before they even go to your profits, they'll first of all look at your type of business. Have you made a turnover in excess of 100 million, or is it lower than 100 million? Then you are a small company. They don't even care what profit you have made. Whether it's 1 naira, whether it's 2 naira, is of no concern to them at that point. Once they have discovered that your turnover is less than 100 million. Now, if your turnover is greater than 100 million, they will now say, oh yes, you are in the bracket of the people that should pay tax. They will now move away from your turnover to what is your profit. So can you see the difference? So
Yes.
one is just to determine whether you are eligible to be taxed or you are not eligible to be taxed. When you are eligible to be taxed, they then leave that criteria and then go to what is taxable. I hope that clarifies.
Yes, I understand now. Thank you.
Thank you.
All right. Thank you all so much. The time is 1 minute past 9 p.m. We've been going on with the session for 2 hours now, and I'm sure we have so many other questions and so many other things to say. I've dropped the email address in the chat for anyone that has any more questions. And of course, you can follow us on our social media handles at Optimus Bank on LinkedIn, Instagram, all of the other social media platforms to stay abreast of any other sessions that we're going to have. And there will be a lot more on other interesting topics like this one. And we'll also have other senior members of Optimus Bank giving us different information about different topics that you all want to know about. Thank you so much for your questions. You can make any inquiries you want to make as well. We can also open accounts for you. We can speak with you on advisory on things like tax and others. So it's been a wonderful night. Thank you once again to our eloquent speaker, Mrs. Adetutu Odudaria, CFO of Optimus Bank. My name is Edidiong Eton. I've been your host for tonight. Good night, everyone, and see you next time. Cheers.
Good night, everyone.
Good night. Good night.
Good night. Thank you very much.
Good night. Thank you so
Good
much.
night.
Right. Well done.
You want to
Thank you so much.
Thank you very much.
Bye-bye.
Thank you, Optimus Bank.
night.
Well done. That's all.
Good night. Thank you. Thanks, everyone.
Good night.
Thank you.
Thank you, CFO. Thank you.